just in case you're internationally wanted and you don't want to be your name coming up on YouTube. Let's give it a second and we're going to go back into that diagram. And this is the only diagram that you need to really understand. All right. So the most fundamental thing that you need to understand about these financial markets or any markets is that the market only does one of three things. Okay. Those three things are that the markets move bullishly. Have a look. Like so. Bullish, uptrend, higher highs, higher lows, all describing the same thing. All right. The markets move bearishly. Bearish, short in the market, lower lows, lower highs, sell in the market, all describing the same thing. And the markets move sideways. These are the cycles of the market. There isn't any market out there. You're never, I promise you, going to see a market that does this. Okay? You're not going to see that one. Yeah, you're never going to see this one here. You're not going to see any of these markets. You're only going to see a market that does one of these three things at a time, and a combination of these three things over and over and over and over again. And in every single leg, every single impulse, every single nook and cranny, if you zoomed in, it's doing one of these three things. For example, in here, this little bit of the leg here, the market's moving bullish. Then the market might consolidate up here, then the market's moving bearish. You understand? As you zoom in and zoom in and zoom, you're seeing one of these three things happening. Now, what you need to understand, let's put some text in here as well, because we say we're going to make this an amazing diagram. We're going to say this is bullish. We're going to make that like that, like that. I'm excited for how good this chart's going to look. If it looks terrible at the end, you can cost me. All right, bullish. And then we have the market moving bearish. Okay, like so. One thing I'm not happy with is why isn't JJ's camera on? There you go, should be there. All right. Apologize for my appearance. I've come straight from the gym. All right. And let's go back over here. Sideways. Now, there are many names for these phases of the market. All right. Some of those names include, higher highs and higher lows, or we're going long on the market, okay, for bullish energy. Also bearish, short in the market, sell in the market, lower highs and lower lows and lower highs and lower lows. Okay. Now, this is all you need to understand how the markets move in cycles. All right. They do this. A, M, D. Does anybody know what AMD stands for? Does anybody know what AMD stands for?
Accumulation, manipulation, and distribution.
Now, if you keep that, you're correct. You keep that thought process in your mind constantly about these markets. All right. So, has it got two C's? Who knows? Am I spelling that wrong? I hate to spell things wrong, especially when it's forevermore on the internet. Yeah. I got a feeling that it hasn't got two C's. Someone's going to tell me in a minute. All right. accumulation, manipulation, and as Jason rightly said, with his educational smash in front of his daughter, showing her that daddy can commit to something, can work hard, can learn new things, willing to learn new things. This is very good traits for our kids to see, us constantly learning, us committing ourselves to something. Okay, it's important. Think about it. Most kids don't ever see you at school, don't ever see you learning, but yet you want to tell them to learn and focus and concentrate. It's very, very good. All right. So accumulation, manipulation, aura, and distribution. There it is. I was going to say. That's what the markets do, guys. So, for example, and I'm going to show you a real life example in a minute because I'm currently 1500 up in that example. And my alerts are ringing as we've just approached structure. So just because I'm not looking at it, what I'll do, I'll secure in, no, I'll just leave it risk-free and leave it on God just because I'm not looking at it, all right? Right, so when markets move and we wake up in the morning and we see a market doing this, I want your brain to, first and foremost, you need to understand the bigger picture market structure, which I'm not going to go into on this diagram. There's not enough space. But you need to know if the market is overall, meaning on a higher time frame, are we bullish? Are we bearish? Are we sideways? You also need to know, are we in a premium or are we in a discount? This is even slightly more important than whether we're bullish, bearish. As are we in a premium or are we in a discount? What does that mean? Are things expensive or are things cheap? Yeah, because when things are cheap, people want to buy those things. When things are expensive, people don't want to buy those things. They want to sell them if they've got a box of them in their house. You need to understand that. That's the overall picture. But if I wake up in the morning and I see the markets doing what we can see here, I think this: accumulation, manipulation, distribution. So in this little diagram, the market is ranging. Yeah, it's doing one of our three things, sideways. That is accumulating the orders. All right, that is accumulating orders either side of the range, of the trend, of the range. The range is trending sideways. Yeah, the market is moving sideways. This could be over 5 minutes, 10 minutes, it could be over weeks, it could be over years, the market could be going sideways. Doesn't matter. The market's fractal, does the same thing over and over and over again on different time frames. Now, you need to understand how these markets work. These markets are trying to take your money, trying to make your money their money. It's a game. It's a zero-sum game. Okay? It's not trying to say, oh yeah, how you doing, Jermaine? You've come to the markets today. I want to give you as much money as possible. No. It wants your money. Yeah, it wants to hit your stop losses and then take that money and put it in their pocket. It's a matter of liquidity. All right, there's a certain amount of money in the bucket. I want that money. Someone has to have the money. Yeah, so it's either them or me. Yeah. So all the people that see this market doing this, and they're like, yeah, this is a really strong area of support. They have stop losses up here in this little point here. Let's just make this L1. Yeah, L1 standing for liquidity 1. If I can grab it. L1. And then there's some other guys turning around and they've seen, no, look at that. That's support, so that's resistance up here. So look at this area of support is so strong. I'm putting my stop losses down here. This market's going to go to space. I've been watching all the YouTube videos, and that's what it's going to do. Look how strong this level is. It's a key level. It's at a number, a nice round number of all the zeros and this, that, and other. Yeah, this is the level. And what the market does when it's accumulating these orders either side, it's going, it's got its own narrative of what it wants to do. It wants to move down, go to lower prices. But before it goes to lower prices, what happens is we see this market manipulate. Now, let me explain to you what that manipulation just does to the markets. What that manipulation has just done is it has not only taken all the stop losses of all the sellers that were going, this is going to go down, and they believe this level was solid as a rock. Nam, 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 nam. Eats their stop losses. It not only got, the break and retest, which is a strategy, very basic strategy. The market breaks. We're going to when it comes for the retest, I hit the button in here because I want it to go higher. They hit the button in here. Look, they start going, I told you break and retest is the truth. It's nothing better than break and retest. Guys, I'm going to just secure in a grant because why not? Because we have got to structure, but we'll see that in a minute. So they go, yeah, look, break and retest is the best. I told you guys, man, this is easy. I was on YouTube, break and retest. And then the market does this. And it does that with strength and speed. It hits some rhythm coming down there. Zoop. They had their stop losses below here, so they're gone now. All right, so let's see what the people that have gone. All of these guys here have gone, thinking that there's, their structure was so strong, nothing can break it. It was a key level. We've got our stop losses above this area. They've gone. Our break and retest people, when the markets come all the way up in here, and they're like, yeah, we're killing it. We're going to the moon. We're mooning. Yeah, we're going to get 100x. But when the market comes down and pushes down there, they're gone. Because their stop losses were here. And then the market actually does something that we call a correction. Just in case those people, think to themselves, yeah, I'm in for the sell now. They're just hitting the button like they're playing an Atari. It tests them. It says, are you sure? Do you really know what you're doing? Comes back up in here. Your profits that they was just in from taking this trade of it coming down here starts going backwards. And they're like, oh my gosh, I'm -10 now. They think it's going back up again. They're totally confused. They've got whipped them up into an absolute frenzy. And they're like, and they either get stopped out because they had some stop losses here, or they start questioning what's their whole life. Yeah. And then we see the markets do this. Now, what I have just described is multiple strategies. It's all of these strategies combined into one because it's the fundamentals, it's the building blocks, it's the foundations. Because this here also, you guys should be able to see a beautiful manipulation M that just took liquidity. And then the market's tapping in here. Brrr. But this is also accumulation, manipulation, distribution. And we're trying to get in on the distribution. This could also be considered Wyckoff schematic. This also could be considered about smart money concepts. All of them are the same, all surrounded this accumulation, manipulation, and distribution. All surrounding that accumulation, manipulation, and distribution. Now let's have a look at it in the real world. When I say real world YouTube, I'm talking about, here's one I made earlier. I'm talking about this morning. The date, as you can see, as you can't see, let's let you see it. The date is 8:25, 35 seconds, 21st to the 2nd, that's February 2025. This morning, we're sitting here and we wake up in the morning, we're in London, we're in the UK. and we see JER 30. Get rid of some of my scribbles over here. That not only has another bit of confluence, which I'll talk about in a minute, which is our outside candle energy, but we see the markets. Allow me, I'm just trying to get rid of these. We see these markets doing what? Can somebody tell me? Let me get rid of some of all of this stuff. Let me hide this for now. Let's get rid of some of this bits and pieces in there. We see the markets in here. Look at my little box. And what is it doing in here? What is it doing in here based upon what we have spoken about here? What's going on in this little gray box that I've just drawn? Don't be scared to speak up, anybody. Yeah? Don't be scared to speak up. What is going on in this little gray box here? Guys, this is the absolute fundamentals. What is going on in this little box? I know you're all just trying to unmute yourself. I know, I get it. It's accumulating. It's accumulation. And then we see the market manipulate. Take those stop losses we spoke about. And then we see the market distribute lower. That's how I just took $1,000 out of the market. And where does it go to? And where's the target? Well, below this level, we understand that there's some structure here. Could be seen as a TP. Yeah. Because ultimately, similar to above this accumulation, have a look, where there is all of these orders in this liquidity pool. There's all these orders that was below here. So it makes sense that when it takes that liquidity, we have a little push up. And then maybe it might continue pushing down some more. But it's just taking that money off of traders. Accumulation, manipulation, distribution. Now, I'd like to see this distribute further, but I do have a concern, hence the reason why I squeezed up my stop and I kept looking aside because I wasn't monitoring it, wasn't managing it, is because in the range that I drawn, which is that those two solid orange lines, we're in the bottom of a range. And the bottom of any range is a discount, meaning that there is buying pressure of people that think to themselves, oh, this is really cheap, this is. It's a nice cheap flipping air fryer that we've seen here. Normally the air fryers are 100 quid. This one's on the market in Costco for 30 quid. Demand is created because of where price is within the range. Because there's some, they're saying, well, you know, last month, you know, the price was up here, mate. It was 130 quid. And that was 30 quid. Within this range, because obviously if you went back 4 years ago, well, the air fryer was only 50 quid at its highest. But because of inflation and this and that and the demand, the price has been steadily going up. And John remembers seeing it a month ago at 100 quid. And he's like, well, it's 30 quid now. There's going to be a rush of demand of Johns that go and want to buy an air fryer, even if they've got an air fryer. They're going to want to buy another one just because it's so cheap. They're like, oh, really? It's so cheap. Might as well buy one just in case this one breaks. I might buy one for Sally on Christmas. So my concern is just where we are in this range. Hence the reason I was just like, you know what, cool, let me take my grand. And we go again. Because this isn't a 10 out of 10. A 10 out of 10 would have been here. Have a look at it again. Look, I'm just going back. What can we see? Accumulation. Then what can we see? Manipulation. Then what can we see? All the way to hell. Distribution. Now I would have preferred to take in that trade. Why? Because I'm selling from a premium. I'm selling when the price is expensive. This makes sense. If I had a box of, iPhones that I bought for $1,000 each, and I had, 10 of them in the box, But for whatever reason, iPhones are going berserk. They've heard about some new feature, there's some update that they've done, and now they're 3,000 quid. I'd be in a rush to sell my box of iPhones before people come to their senses and realize that Samsung's had those features for the last 20 years. I'd be like, yo, I'm trying to sell them right now. I'm making, yeah, 300% on these phones. I'd be selling, and look at this aggressive selling that went on from a premium. But when we get back down in here, at least within this orange range, we are in a discount. Now, the reason I said at least within this orange range, because as we understand, these markets are fractal. There are ranges and impulses and retracements within retracements within retracements. It's the Russian doll theory that we speak about. Yeah, that Russian doll theory is the fact that one thing is happening within another thing is happening within another thing. Yeah, it's contained within another thing. The 5 minutes contained, or the 1 minute's contained within the 15 minute. The 15 minutes contained within the hour. The hour's contained within the 4 hour. These are Russian dolls. Yeah. The 1 hour is contained within the 4 hour. 4 hours contained within the daily. Daily's contained within the weekly. So we might be, in a premium on the 5 minute. We may be, in a discount in the hour trend or range. Do you get it? And you've got to respect the higher time frame. That's why we zoom out. That's why it's called top-down analysis. So you know what's happening from the top down. Okay. Okay. Any questions about that? Because that is the fundamentals. That is the absolute raw basics fundamentals. Does that mean that you can now ride off into the sunset and every single trade you take is going to be hitting and smashing through? No, because there's other nuances and understandings you need to know and be able to add to your trading. But what I've just showed you is how to jab and move your feet. Does that mean you're a champion straight away? No. Doesn't mean you're going to be a champion straight away. There's a lot of other things you've got to think about. There's a lot of other intricacies. Yeah. But if you don't get that fundamental, the cycles of the market and where you are and how to be able to, react based upon where you are. Like we are in the premium of this yellow range. We kind of broke outside the premium, even manipulated outside of that trend, really capturing some liquidity. But now we're at the base here. There's a big question mark, which you saw I had some question marks on there at the moment. Is this market going to get back with the program, or is it looking to write its own program? Is it going to start getting back to the program, getting back down to this yellow line? Or is it going to be like, screw the program? I don't know. Don't have a crystal ball. I wish I knew. If I knew, I'd sell the house, the kids, the cars, everything, an arm, and I'll put everything knowing what's going to go on. I put everything on sell or buy. I don't know. Hence the reason why just now I was in the air of caution, and after taking a very easy, clean trade within the strategy, and to be fair, if I wasn't on the call, I would have taken a bit more money out of it. Probably got up to about 1,700. Okay. But this was really my target. Really, I should have just closed my trade here at the bottom. This was my target. You can see I've put it as a blue line in here. This was my target. Because it's targeting the opposite side of the liquidity. And if I was to put back our indicator showing our sessions, you can see how we took Asian session highs, which is the top of this red box. We also took a previous New York session high over here. Then we decided to break structure, making some manipulation patterns. Finally, making a manipulation M, or a little bit of consolidation in here. Finally making a manipulation M. Tapping in right here is a beautiful entry if you're taking it on the tap in. right here, and on a smaller time frame, there's a lovely breaker structure in there on a smaller time frame. And then the market distributed. Brrr, and where did it distribute to? Well, taking the liquidity below the other lows, which is Asian session lows. These lows over here. That's a target. Now, could this market decide, remember that decision that we don't know about because we're in a discount, that it's like, you know what, Jay, screw going all the way back up there. We're going down here. Of course it could. And later on, we could see this all the way down here for a gazillion pips. But this was the sure target. I wasn't concerned about this trade at all. This trade actually pushed all the way down to here and then started retracing all the way back up here. I wasn't concerned. Because I'm like, if you come all the way down here from being up here, why wouldn't you take this liquidity? Why wouldn't you steal this pool of money? You've just taken this pool of money because you're a thief. Why wouldn't you steal this pool of money? You're a thief. Well, on the way down, you turned into a monk or a saint? No, you're a thief. And what you do is you steal liquidity. And what did it do? Nam, 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 nam. Came and ate the liquidity. And then started running in the opposite direction. Now, we don't know at this point in time if it's the type of thief that is going to just run all the way home. This is the type of thief that just take the liquidity and then wants to take out all the money out of your wallet, throw your leather wallet in the bin, put your money in his pocket, and then try to just continue walking straight past you after he just took your wallet. We don't know. But this particular trade was easy. Yeah, we've seen a reaction from there. Have a look on the 1 minute time frame. How the market pushed down here, making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. We've seen it make of minor structure, meaning here, this is all this, smaller structure. We've seen it make higher highs, slightly higher lows, slightly higher highs. Now, are we going to break this structure here and show that we want to actually start pushing up bullishly from this discounted area? Or is it actually going to be like, in fact, G, this was just our little reaction from taking all this liquidity because there was lots of buyers in here, lots of demand. This is our reaction. But to be fair, there's a lot more selling energy and selling pressure that's going to get us to bust through these little buyers here. So I've taken my money here in an ideal scenario, but what I did is I just protected my position and protected like $1,000, 1,200, something like that. So maybe I got stopped out about here. But now we're waiting to see what this market wants to do, because this high here leans itself to some 5 minute structure. So are we going to break 5 minute structure? Yeah, we've broken some minor 1 minute structure, but remember what I said to you. These markets respect their elders. Does this have enough energy and vim and front? And does it think it's the big man enough to come and break 5 minute structure? Because if not, this market has just made on a 5 minute time frame a lower low, a lower high, a lower low, a lower high. Therefore, the next one we might be expecting is to see a lower low. Yeah, I don't need to sit in that. I hit my target, which is these taking this liquidity here. If anything, I should have just executed my closing that right at the tip down here. But because I was busy making this absolutely beautiful diagram. In fact, maybe can I make it any more beautiful? Let's make it a bit more beautiful. Let's change this to a solid line. Let's keep that as that line. Let's make this one a different color, different type of line. So I can't hate on my diagrams. Let me make this a nice solid line. Showing accumulation. Let's write in there so we can see, so we remember when we take a screenshot, we can remember everything. Accumulation I'm still wondering if it's got two C's. I can't lie to you. I mean, I'm not gonna lie to you. My spelling used to be amazing, yeah. But from the rise of WhatsApp and other stuff like that, spelling's suspect. I'm just putting it out there. It's my disclaimer to the world. All right. Let's go with accumulation. Let's make this a different. Let's make the background. Let's make this text black and the background white. Okay. Accumulation. Manipulation. And I'm not gonna lie to you. I'm gonna go and Google it because I'm not happy if that accumulation's got one C. Just making me look like irregular. Basic ninja. All right. So, and then distribution. And it's going to change magically. What takes its time? There you go. Looks right to me. All right. And that's what happened. Look, just this morning. Here. Accumulation, manipulation, distribution. And we're trying to get into the distribution phase. Have a look. A very easy trade that happens over and over and over again. That could have just pocketed you 70, 80 pips. That's you done for the day. Like, I just made $1,000, which could have been 17, 1800. If you really want to be there, you really want to think about it, that could be you done trading for the day. You made £1,800. You can now go to the park and do push-ups for the whole day. Take your socks off, go and walk in the grass and ground yourself for the whole day. You made £1,800. And if you keep up that behavior, you'll run what? 10 grand a week? On a 5-day week? 40 grand a month? Obviously, this is me painting the best case scenarios because you're going to take losses in trading. But the point I'm making to you, this is the power of trading and it's how easy it can be when you understand the cycles of this market. I don't have any need to go and give back my money that I've taken. Now, what I am going to do is this. I've given you guys some rules. The rules are you cannot give back more than 25% of your money. All right? So I've taken a good successful trade today. My next trade I'm going to take is going to be within that 25% margin. And if I lose that trade, I'm done. Okay? That trade, I'm done for the day. Or I can split that margin up into smaller trades, but within that budget. How do I describe this another way? Is I describe this as you take your profits and you move some into your savings account. Take it out your current, move the lump of it, 75% in your savings account, then you work off 25%. Why? Because you don't want to end the day as a loser, especially if you're doing challenges. If you're growing your wealth and something else, it's maybe a bit different. You can be a bit more risky, a bit more like, you're trying to make it. But when you're playing a game, you've got to play the game. And this is the game. So I'm going to allow you guys who haven't taken a screenshot to take a screenshot. Let me move everything out of the way so it's nice and pretty. Take a screenshot. In fact, what I should have done is I should have color coded it better. I'm going to start. Let me start again. Let me color code it a bit better. You ready? I'm going to color code it better, like that, like that. No, doesn't even make sense me doing that. All right. This is all the markets do. If you can see this, this could be the one play that you need. This could be the one move you need. What do I mean by that? And let me get rid of these crosses because these crosses was talking about all the people this people stopped out. Let me tell you one more time what everyone it stopped out. It stopped out the sellers that before this happened. All right. If I was to put, have a look. Let me get a nice big black box like this. Let's double click it. Let's make the background like that. Oh, that's interesting. Absolutely nothing happened. Let's go again. Why did nothing happen? I'm just not sure. Am I selecting the wrong thing? Yeah, there you go. I'm selecting the wrong thing. All right, so let's see. Let's see who this box. Let's see who this market stopped at. So all the guys that are on YouTube, they're saying that this area here, this line here, oh, that's on a key level. It's a very strong area of resistance. Place your stop loss above there. We're selling this range. There's guys down here say, oh, this is support. Look at this support. It's a key level. It's a round number, or, you know, blah, 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 blah. You know, nothing's breaking past here. This is made out of adamantium. They've got their stop losses down here. They're trying to buy. Well, what happens is this push gets rid of all of those guys. Stopped out. Now, there's something else, another strategy that everyone's been on the internet watching and heard about. Yeah, man, just trade break and retest, man. Just break and retest for me. Okay. So market breaks. It retests. And the break and retest traders are in. It's come and stepped on a previous battlefield. They are in. And then they're going, told you. Look at that reaction. I told you I'm heavy. Now, they're only heavy if they take their profits at that previous left shoulder, that high here. If that is your strategy, break and retest can work. If they take their profits at this high here. Because we understand we're waiting for manipulation M anyway. That right shoulder is supposed to be bigger, higher than the left shoulder. If they took their profits there, their entry was there, then cool. I get your strategy. Because look what the market does next. All the other guys that think she's going to space, because they do not understand accumulation, manipulation, distribution, the market goes bang with strength and speed. So it does it quickly. Doesn't even give you a chance to sort your life out. It goes zoop. Now, the break and retest traders who had their stop below this low, they've been stopped out now. They're fuming. Now, there's some traders that they get in straight away as they see this market pushing down here because it was such a big red candle. They get excited. Oh, yeah, the market's going down. It's time for me to sell. As soon as I sell this, I'm going to be able to go and buy the Porsche. I've seen all the traders on Instagram. They've all got Porsches. I need one. And I'm going to get it. I'm going to get it right now from this trade. The market goes, it wants to be sure. Are you sure? Do you believe? And it does this that we call a correction, pushes all the way back up. Sometimes we get deep corrections. This market pushing all the way up in here. And if they had their stop losses somewhere in the middle here, a fixed stop loss, or in some, just at the other side of the imbalance or whatever it may be, then they could get stopped out. Gets rid of those guys. And then the market, after breaking some structure on a smaller time frame, finally goes to where it wants to go, distributes lower. And where does it target? Remember, there's liquidity over here. So it's very, very possible, as and when this market breaks that level over here, that you do see some sort of reaction. But that could just be the retracement of the overall bearish energy of the market. Oops, don't know what I've done. Wow, don't know what I've done. Lost it. There we are. That is the only thing, not the only thing, but that is one of the key fundamental things you must not understand, but it's got to flow through your veins of these markets. And this is just not just me just telling you the theory. Prior to me telling you the theory, this is the trade that was taken this morning. Accumulation, manipulation, distribution. And I wouldn't be surprised if this market continues to distribute a little bit lower than my little orange line. But this was an easy trade. Now, there's lots of other confluences, lots of other things we look for, lots of other things that can increase your probability of the trade being successful, waiting for confirmations, seeing certain things. We talked about flat top, flat bottom candles. We understand imbalance and, liquidity grabs and tapping in and dropping down. We know manipulation M patterns, W patterns. We know how the market likes to move. All of these things, as well as superimposing fundamental energy, of what's happening fundamentally. All of these things help us to increase our confidence in what we're going to do. But they are all underpinned by the fundamentals. I even was looking back in here, like I said, when we were just scrolling through, this chart, and I said to you, I would have much preferred, the reason why I manage my position so tightly, because we're at the bottom of this smaller orange range, but this orange range is actually the top of a bigger yellow range. But I would have much preferred to be sitting in this cell right now and just go to sleep on it from up here. Why? Because that would be me selling from a premium, not selling in a discount, which is ultimately what happened here. Because this market might take this liquidity, might come down here, take this liquidity, then might start pushing up. We can see some good reasons of why it might want to push up. Look at it on the 4-hour time frame. Look at all of these bad boys. What is inefficiency? Look at all of this inefficiency. I mean, that market could definitely decide it wants to push up. But I trade what I see. And what I saw this morning was liquidity being taken from above Asian session highs and a New York session high. Yeah. If you want to see what that New York session high is and the Asian session high is, I'm using an indicator. I was using it, looks like I deleted it by accident. Let's go and find it again. It's called ICT kill zones, not because I care too much about ICT, but it's more say about this indicator just shows some kill zones and shows us the sessions, i.e. Asian, New York, London sessions. We can see liquidity was taken from above Asian session here, was taken from above New York session here. And then the market distributes, and as I said, I wouldn't be surprised if this market continues to distribute lower. It's only true I was teaching that I said I'm going to take my profits at my TP, because my TP was hit, which is liquidity below these levels in here. That was smashed through. And then we had a little retracement, but that little retracement, look, at the moment, I'm not going to count our chickens, but at the moment, 5-minute high, lower low, lower high, lower low, still hasn't violated the last high. So we could get a lower low in here. Yeah, but we don't know. We've hit our target. We're waiting and seeing. Is this market going to violate this orange range and push down from this premium, or not? Let's go and look at another market. I'm gonna pop an alert in here. I'll pop in one down here. As this market starts pushing down, and I'll pop an alert up here. This market starts pushing up, but that market has done its job at the moment. Gave me over $1,000 in minutes. Let's go and look at something else. Let's have a look at Euro USD. No, in fact, let's have a look at Euro USD. Okay, I'm going to wipe my charts because it's looking like an absolute disco. And we can see that yesterday we had an outside green candle, meaning that this market closed outside the range of the previous candle. Okay, now we need to understand, remember, our top-down analysis is where we are in the universe. Where are we? What are we doing? Yeah. Well, this market, as we can see, going all the way back to 2003, was pushing up bullishly, got to this level in here, and then since then, this market has been bearish. It has been bearish, making lower lows and lower highs. It doesn't matter whether you started today or you've been trading these markets forever, you can see this. And that doesn't help us immediately today about taking a trade, but it shows us this overall energy. How this market's been respecting this falling trend line, these falling prices. Yeah, the euro has been losing strength against the United States dollar since 2007. All right. Now, on a daily time frame, we can see that yesterday we had an outside green candle. Because remember, even when I'm looking at this chart here, this is looking a little bit accumulation-y to me. Therefore, this is looking a little bit, what am I going to say? What am I going to say? This is looking a little bit of, it's looking a little bit manipulation-ish to me. And we might get, I'm not saying we are, because I don't have a crystal ball, we might get some distribution up into these levels before the market decides actually it's not impossible. So on a daily time frame, we can see that yesterday's candle was an outside green daily candle, making us think to ourselves that maybe we're going to have another outside big green candle. But we know that once these candles open, they like to put in a down wick first. It's very rare that we see candles without no down wick. And that could either allow us to take the sell into closing up the imbalance in here and here, between there and there. And there is the last previous wick where the price went to and where the candle opened up. Okay. Or once that's been closed, gives us an opportunity to potentially get in for the buy. Okay. So I'm interested in buying this, to be believe it or not. And the markets we can see here, this is Euro USD. We saw a huge push with strength and speed, taking the liquidity from below Asian session lows over here. Liquidity taken. And pushing all the way down into this level in here. And the question is right now, is this giving me an opportunity to get in for the buy? If I go to my 5-minute time frame, we can see a lovely manipulation W that formed here. And the market tapping in right now. Yeah, I'm going to drop my time frame down to a 1 minute. And I actually like this for a buy and taking a jab. It's only going to be to these lows, about 10 pips. I like it right now. I like it to take a jab in, and I may do exactly that whilst I'm on the call. As this market taps into, have a look, 5-minute manipulation W into the middle of the W, close this imbalance, and I'm looking here on a smaller time frame. Are we going to get the reaction that we're looking for? We're seeing the market definitely slowing down. It's definitely doing something in here. Okay. It's definitely doing something in here. It's kind of going sideways again. It's like it's having a conversation. It's not too sure. Look, on a smaller time frame in here, it's kind of thinking about it. Look, it's kind of thinking about it. Straight away, as soon as I see any type of sideways energy, my brain is thinking, look, and you might not be able to see it. They're like, is that sideways, Jay? Watch, look if I drop it down to my 15-second time frame. Looks sideways, right? So as soon as I see that, my brain goes straight away back to accumulation, manipulation, distribution. So if I want it to go up, there's a high possibility this market may spike down first before pushing up. Yeah, there's a high probability that that might happen. If it doesn't, then I'm looking at it from another perspective of indication, correction, and continuation above a level. But right now I'm calm. Now I could just hit the button right now with my stop below the lows, looking like this. Because this is on such a small time frame that really this little push over here could be the manipulation below here. Yeah, but it's no panic. I know how big this zone is. I've already got it locked in on my MT5, and I've got it on a worst case scenario. This candle closes in 15 seconds. It's going to be a lovely break off some smaller 1 minute structure. All right, that smaller 1 minute structure is here. Okay, closes in, it just closed. We've seen this candle close here. Now, for me personally, I'm watching it here, and we're looking at it to see, we're thinking to ourselves, is this market going to push down some more down in here before pushing up? On the 5 minute time frame, that push that looked all compelling is just going to be a wick. And the market could decide to wick down in here first before pushing up. Okay. But I do like this here, potentially with my stop below these lows for the buy. Now it's just about entry. Can I get a better entry? Have a look. Just being patient. This market's pushed up here. So now this little bit of accumulation is looking like maybe the market manipulated to the top end, only to push down in here and distribute down here before maybe going up. Maybe, baby. Yeah, but I don't panic. I'm not rushing in there. You see, a more novice trader would have seen this green candle and be like, I hit the button. Maybe you did it. Maybe you hit the button. Not me. I'm calm with it. Because the market may have just accumulated above here. Sorry, accumulated here, manipulated up here. This was the distribution. And now might be when this market wants to go and do something. We've also seen the market on a 1 minute time frame take some flat bottom candles. There is another flat bottom over here, which is one of our confluences. There is another flat bottom down here, which is a bit of a concern also. So I'm going to not be that hasty just to go and hit the button. I don't want to just give back my money. Remember also is that I'm only playing with my budget, with my current account. I'm not playing with saving account money. My saving account is my saving account for the day. I'm cool with it. All right, I'm cool with that. So instead of me risking $1,000, I'm gonna maybe risk $250 right now. Yeah, the market has manipulated down and distributed down here. Now it's going to where it actually wants to go, and making actually a bigger little manipulation pattern here. Got 48 seconds for this candle to close. If this candle closes over here, we can choose to take an aggressive entry with a stop below these lows, which is going to be an even better entry than, or as in smaller entry, I wouldn't say better, or we can continue to leave our stop down here for about 12 to 15 pips. Yeah. Remember what I said. I'm only playing with my current account. I'm not going to play with my savings. My savings are gone. They've been put away, locked away for 2 years in my high interest brokerage account. Yeah, I've got no reason to play with it and take away from my profits, because I already said to you I could have been done for the day. Got 6 seconds for this candle to close. It's going to close above here. Looks like it is. I feel like I'm interested in getting in this for the jab. Candle has closed. Taken a jab. And I've taken a jab as a fraction of my budget. Yeah. So I've taken a jab, not even using my full budget, but as a fraction of my budget. Why? If it goes for another 1 to 4, which is, mediocre, or not mediocre, but it's possible, then I've just added another 100% to my daily profits. Whereas if I lose, I've only lost 25% off of my profits, and I can call it quits. Yeah? Any questions, guys? Any questiones? Any questiones? Any questiones? Let's go and have a look at the news. See
yeah, Grand Rising, no? PMI news is on. I think that's why the euro sank. I think French PMI news wasn't good. If you want to know what PMI news is, it's the Purchase Managers Index. It's a collection of monthly surveys of business executives. Yeah, right. Anything above 50 is good. Anything below 50 is negative. Yeah, as you can see, we've got PMI news coming up for the GBP. 50 and upwards is healthy. 50 under 50 is very unhealthy. That just shows you, it gives you kind of business confidence. It does move the market, as you can see. So keep your eyes on the PMI news today. I believe you've got the manufacturing PMI for US coming as well. Yeah, that's going to be very interesting. That again will move US pairs as well as the indices. Any questions, anyone?
Thank you so much for that. No,
I put something in the group yesterday. Sorry, Jay. I put something in the group yesterday regards to Walmart. Walmart
yeah,
moved the
yeah.
Dow.
Tell
The
us about
Dow.
that.
Yeah. Basically, Walmart's a massive company. Yeah. Basically, it's been affected by the Trump tariffs, which Jay, what did I say? Said that 6 months ago, right?
See that
Right.
100%.
The tariffs are going to affect big companies, and the thing about Walmart, it's got a massive percentage in the Dow. We talk about Apple, we talk about other companies, the big seven, but also Walmart's. I think it's the biggest, one of the biggest companies in America in regards to supermarkets. I think it is the biggest. Yeah, so it does have an effect. And at the end of the day, the tariffs are going to affect that. So that is why the profits were okay, but not good enough for the market. But the tariffs are affecting and the long haul. They're looking at we talk about long term. Their profits are going to go down. That is why they sunk. Their share price sunk yesterday, and with that, the Dow sunk as well because I believe Walmart's quite a bit of percentage is a big percentage of the Dow as well. As its top 30 companies in America, Walmart is one of them. Walmart is one of them. So volatile times, everyone. Volatile times. So yeah, just keep. If you trade the Dow, understand what companies in the Dow. Yeah, I think that's really important. So you can keep an eye on them. If you trade the US 100, understand what companies are in the US 100. The top seven, yes, they move the market. That's why their earnings are after hours. Yeah, I believe Nvidia's next week after hours. I'm not sure which day. I'll find out, but that's next week. That's after 9. That will move the market massively. If Nvidia, I'll give you a bit of advice. If Nvidia shows a negative, yeah, the market will sink the next day. Yeah, the indices. That is 100% fact. If Nvidia shows future earnings massive, that shows a great profit and future earnings are going to go to the roof, the market will be bullish. All right.
If anybody doesn't know, what's the Dow?
Dow is US 30. Dow Jones, that's what they call it.
Yep, that's correct. Guys, I hope you see what I'm writing right now. You guys might think yourself, oh, yeah, I know that, man. It's the basics. Well, keep it basic. Keep it simple, stupid. This is the fundamentals of the markets. All right. And if you can see this and understand this, and you don't have to wait for me, you don't have to wait for, you can back test this. Go back and train your eyeballs to zoom in on this. Train your eyeballs to understanding if you're in a premium or a discount. Would you like you see my analysis of saying I would have preferred to be selling it from up there in a premium? Brrr, it ran forever compared to where we were. Not to say it might not break that structure, but I've got no reason to believe it's going to break that structure right now because it hasn't done for the last however long. I mean, yes, we are in a premium. Yes, I do want it to break there, but I don't have that confirmation. That's that confirmation happening right now. Yeah, because of my alerts watching it. Let's have a look real quick before we finish up. Let's have a look right now before we finish up. If I can get to it. Thank you very much. Let's do that. Let's go and look at let's use our wish list over here. Yep. As I thought. As I thought. Now, am I in this at the moment? No. Stop myself out of it. Over here could have been double the amount. Maybe it'd be about 3.5 up right now. Yes. But I wasn't managing it, and I was happy with it taking this structure here. I wasn't willing to sit on it, coming all the way back up to 0, only to push down here some more. If I was watching it, I would have got back in again here. After I've seen it structure break and indicate correct and continue in the opposite direction, there's a manipulation M in here on a smaller time frame, and seeing it tap in here, maybe I would have been in for this leg down here, for me to be honest. but I'm happy because it is what it is. We're still at the bottom of the range, and that question of whether or not we're going to break outside of that orange range still hasn't been answered. Yeah, still hasn't been answered because I can't just go by my lines on a screen. My lines on the screen are just lines on the screen. I gotta go by structure. Yeah, so we've taken the structure from below here. Are we gonna have a reaction bullish to taking that liquidity below here? Yeah, or are we gonna have to come all the way down here and sit on a previous battlefield over here? Who knows? But what I can trade is I can trade what I see, and if I see the market indicating correct and continuate below this level in here, then I can make a choice. But I don't really want to sell from a discount. Guys, I want you guys to have an absolutely amazing day. I hope you've got some good education from this morning. I think there was some serious sauce that was spilt. Yeah, especially in regards to putting money in your savings account. Yeah, put the money in your savings account. It's very important. You see, right now I've actually got a funeral to go to today. So right now, I know that I am going to end my day regardless in profits. So I've made a certain amount of money. I've put a certain amount into my savings account, and now I'm only playing with the current account, which is 25%. If that 25% starts going well, great. Then now I'm adding to that pot, and that 25% gets bigger for me to continue playing with. But if for whatever reason I'm wrong, then I start taking L's. I'm not going to take more L's past 25% of my profits for the day. That's it. Because there's too many times when we start off, we have great trades, we're profitable, and then we end the day in a loss. It's not acceptable. The aim of the game is to take money at the market. If it's $500 a day you're taking out the markets is 2.5 a week. Still a 10 grand month. Yeah? That's the aim of the game. Not proving that you're the best in the markets, that you can slay the markets, you know everything, blah, blah, you know how to find every single imbalance and there's unbreaker structure. No, it's not the aim. The aim is, can you take consistent money out of the markets? And part of that is actually knowing when to stop. Guys, have an